What happened here with their pricing?
Yeah, well, Muhtar Kent has said this is going to be a transition year. So as you know about transitions, sometimes they're a little messy. So there is a little bit of mixed messages here today. First of all, their volume growth was slower than what they saw in the first quarter. I'm sorry, the fourth quarter of last year, which could cause some concern. But on the plus side, they actually raised pricing by 3%, which was a really aggressive pricing hike. I talked to the CFO a little earlier, and one of the things she noted was that's going to be a little difficult to keep that sort of level of pricing growth going for the rest of the year. And, of course, what you need is obviously you can't sustain pricing growth forever, so you really do need the volume growth. So I imagine investors are going to be looking very close at what sort of volume growth they can do for the rest of this transition year to really get a sense of whether Coca-Cola can hit these targets that they've been talking about.
Right, because, you know, whenever you hear transition year, Duane, that's like cover for, you know, get ready, you might be disappointed, right? So, I mean...
Yeah, one of the things they've done is they've taken their targets down lower, so that makes it a little easier for them to hit this year.
Right.
So the question is, you know, can you hit those? But are they? But as Ken Shea with Bloomberg Industry points out, what people are going to be looking for is whether it's really a kind of a solid beat through this year, whether they beat those numbers because of things like volume growth in key developing markets and places like that, or whether it's going to be driven by pricing. Which again, there's questions about how long you can sustain that. You can't raise prices forever.